Welcome to Stock Market Investing with the ARMR Report. I'm your host, Brett Rosenthal. This is a show about, of course, investing in the stock market. I appreciate you all joining me. And what we're going to do is dive into the world of ARMR insiders and start talking about the week that we've had, what we expect to happen going forward. I want to touch on a couple of topics today that have been on my mind I'd like to share with you. We're going to discuss the meme stocks. We're going to talk about cryptocurrencies. We're going to touch on cannabis. Got to be talked about. Might even get to precious metals. I haven't talked about that in a while. Then we're going to dive into Q&A after it, okay? And we're going to go over chart patterns to get you ready for the week next week of what stocks to focus on Monday morning, all right? So let's set the stage before we get into all of that. The ARMR Report was created for me to share with you 30 years of experience running my personal capital and capital for others. And I developed a strategy that I call the ARMR Investing Way. It's a three-stage process. We build our whiteboard of fundamental and researched ideas we want to own. We use ARMR algorithms to execute when to put capital to work, when to take it out of the market and be more defensive. And we wrap it all up with a strong stop loss discipline, okay? And it's those three cornerstones. If you use those three pieces together, you can really make it through any market environment and watch your net worth grow over time. That's what it does for me. I hope it does it for you. Don't forget, I'm sharing my personal experience. I couldn't possibly tell you what stocks to buy, okay? I'm going to show you in a minute the top stock chart patterns on my whiteboard that I'll be looking to buy Monday morning. That doesn't mean you should do it. I don't know who you are. I don't know your risk tolerance. I don't know your goals. But I'm going to share with you, number one, ARMR algorithms, right? Algorithms drive the market in this world today in many different ways that you see and you don't see. If you're not using algorithms, it's like you're bringing a knife to a gunfight, okay? It's not going to end well for you. And so I really started the ARMR Report to help the individual investor who may not be in the process or not know how to build their own algorithms. So I'm sharing mine with you, okay? Both on a large scale for the market itself and on individual stocks. So I'm going to show you stocks that have set up using our algorithm that we're probably going to buy next week, right? But like I said, you got to determine your own risk tolerance and say, hey, does this work for my portfolio or not? It may not. Okay, so before I dive into a discussion on the meme stocks, cryptocurrencies, and cannabis, okay, those are the top three issues I want to discuss today. Let's just look at the market real quick and see where we are, all right? So what I like to do is share with ARMR insiders what we call the risk monitor over here. If we were to click on that, we'd drill down and we'd see what the ARMR algorithms are telling us. Here's a chart of the S&P. You guys who have been with me for a while are familiar with this chart pattern. We have what's called an Andrews fork drawn on this chart pattern, on this uptrend, going back to the beginning of the mechanical bull market that we're riding right now, okay? We had a pandemic collapse. The Fed came out and said they're going to buy everything in sight. They continue to liquefy the market, and we're in this very clear Andrews fork climbing up the bottom part of that fork. Okay, this is the S&P we're looking at. This is the ETF SPY. So first of all, just to get the lay of the land, the ARMR index-only portfolio. So there's a portfolio I manage, right? My own capital. All I do is buy the indexes. We have algorithms written for the S&P, the NASDAQ 100, the Dow, the small cap, the IBD 50, the momentum, the value, and the ARK Innovator funds, okay? Those 8 indexes will be in or out of this particular portfolio depending on what the algorithms tell us, okay? So there's a little bit of human interaction from the standpoint of I choose which indexes to go with depending on what the algos are telling me, okay? But I would say 90% of the performance of this portfolio is just based on the algos. Okay, maybe there's 10% because it depends on how much margin I might use or not use, that kind of stuff. Okay, so I might try to goose performance a little bit at the right times. So let's go look at the S&P again real quick. So back here when the S&P was making a double bottom, we got a risk-on green signal. That was right in here on May 20th. Okay, a lot of people thought the bull market was over and blah, blah, blah. The end of the world's coming. A lot of people on Twitter wanted to share with me other YouTube videos talking about how the impending crash was here. And I was telling everybody that would, have an interest in listening that the ARMR algorithms are telling us to get long the market in a major way. Okay, so that's what we did right here. And then we added to the market right here on that test. Okay. And now the market is making all-time new highs. And we've created alpha during this period by following ARMR algorithms. So first of all, today, what I'll share with you is that nothing's really changed from last week's one-day sell-off, other than we've moved out of the small cap index and into the Dow. Okay. So let's take a look here. So we still have more than 100% exposure to the indexes through our index-only portfolio. We removed, our small cap investment, as it broke below the 50-day here, took us out of our stop, and we rotated the money into the Dow. As you can see, the Dow has gone through a consolidation going back to really going all the way back to here. Looks like April, May, June, July. And now it's about to break out to all-time new highs. And we have a risk on entry point right in here. Actually, right here was the risk on entry point. Came down, touched it, support held. We're long the Dow now. The biggest issue for me that's kind of been bothering me about the market a bit is this small cap index. Typically, if we're going to see all-time new highs in the market, what we'd like to see is for the small cap index to confirm the big cap brethren. So if we get a more and more narrow market, that can be one of the signs that we're at the end of the bull market run. Now, the end could be 2 or 3 months from now, so it doesn't mean the end is tomorrow. But what it means is if you start to see the market get more and more narrow with only, let's say, big cap tech names leading and everything else starting to fall off, and the first thing you see, that canary in the coal mine, will be the small cap index as it begins to break down first. If that happens, that'll be a red mark against this bull market. Makes me a little more cautious. Makes me want to focus my buying on particular chart patterns. I'm going to show you in a minute the stocks we're looking to buy on Monday morning, that you're going to see they all have the same chart pattern. It's the pattern that's been making us a lot of money in the last couple of weeks, and we're going to keep focusing on that pattern, So I'll share that in a minute. But I do have my eye on the small caps here. If we were to make new highs in the small caps, let's say next week the whole thing reverses and skyrockets, I'll be much more bullish on the market, And I might open up the spigots and get a little more aggressive, But if this continues to underperform and build a top, which is what it looks like the small caps are doing, that's one mark against this mechanical bull market. So we're all trying to figure out how much money can we make before the music stops. So I'm looking for flags. Let me tell you, first of all, mechanical bull markets, or in any bull market, particularly mechanical bulls, they don't just end overnight. So last week when we had that big down day, shakes out the weak holders, gets rid of weak holders. And that's not a bad thing. In my portfolio, I go through and look at what are the weakest positions and I take them out. And I raise cash on that. And I say, great, thanks for showing me where the weakness is in my portfolio. And then I rotate the money back into stronger names Monday, if it requires that. I did a little bit on Friday, but really Monday, I want to see how the market behaves Monday. And we might be putting some of that cash to work as the market's breaking out to all-time new highs. If small caps are joining, I'll be much more aggressive. If small caps are not joining, I'll be more cautious in my approach to what I add. So that's the basic picture of the market right now. It's a bull market. It continues to be a bull until until the uptrend's broken. That really nasty day last week to me is, it's like a shot across the bow. When you start to get a top that forms, you get one day like that, then the market will run for another week or two. Then you have another day like that. and that next day is a lot uglier than the last one, like there's not a recovery as quickly, right? And that's how you build a top. So remember that day. Remember how it felt in your portfolio. If you didn't like it, then you need to adjust your risk right now. Doesn't mean you can't own stocks, but look at the stocks you own. And if the small cap index is breaking down, do you want a portfolio full of small cap stocks? Probably not. You got to figure out your own risk tolerance in that issue, okay? But think about what it felt like. That was the first shot across the bow of a possible change in direction. The second shot would be a further breakdown in small caps, okay? Then the third shot will be another big down day that freaks everybody out, and that'll start to change direction. That may happen, it may not, okay? So we have to stay on our toes here, head on a swivel, so to speak, but just be aware of those things and adjust the risk in your portfolio so you don't take what has been a great couple of months where you're making a lot of money and you give it all away in a week because you're overextended in the wrong names. Be smart, okay? So now let's talk about a couple of topics. Just rants that are on top of my mind that I want to share with you, and so thank you for indulging me. First thing I want to say is, are you aware if you're trading the meme stocks, and I don't just mean AMC and GME, those are the granddaddies, right? Those are the high profile ones everybody knows. But I know in the ARMR Slack room, right? So ARMR Insiders, you guys can subscribe. You know, I'm supposed to tell you, subscribe, you know, hit the like button and all this stuff. You know, ads are supposed to run at the start of my show. But you know what? At the end of the day, I really don't care about all that. Okay. I'm here to talk to you guys and share my thoughts, help get myself ready for next week, and work with insiders that want to be part of the community that makes us all better. That's what we're trying to do here. I don't really care if you hit the like button. I hope you're already subscribed. And if you are a subscriber, share this with other people you think can benefit from these conversations and add to them. I can't wait for the Q&A. You guys come up with some great ideas. And so you take what we do on Saturdays, and as an ARMR Insider, we do it all week together. We're in the Slack room sharing ideas all week, building portfolios, managing risk together. It makes me a better investor. Anything else is gravy. Okay. Anyway, I digress. So in our Slack room, there are some of you who love to trade these meme stocks, and you watch these YouTube videos that say, hey, let's look at these incredibly illiquid stocks and let's go all hit them at once, and hopefully they'll halt them and they'll gap them higher. And okay, I just wanted to share with you this thought. Just be aware. I don't care if you do it. Go ahead and do it. I have no interest in doing it, okay? You guys can do it. I'm managing like a lot of assets. I'm investing capital. I'm a fiduciary, right? And so I'm about managing risk correctly and capturing upside when I can. Make no mistake about it. All of those meme stocks, and I can, you know, rattle them off the top of my head, all these different meme stocks. But at the end of the day, okay, the entire meme revolution that's going on is a reinvention of the bucket shop wheel. Please understand this. Please know what you're getting involved in. Okay? It's the Wolf of Wall Street in sheep's clothing. Now, if you don't know what I mean, let me share it with you. Before the internet, before Wall Street bets and all Reddit and all these different things, before YouTube, before a guy could come on YouTube and tell you to buy a bunch of ridiculously illiquid companies that have zero earnings, zero revenue, bleeding cash, no real business opportunities, and get the stocks to go up 1,000%. Before that could happen on YouTube, people used to do it in bucket shops. Okay? So here's how a bucket shop used to work. The guys who ran these brokerage firms, they call them bucket shops, ran these little dinky brokerage firms, okay, would go out there and quietly buy up a bunch of a stock or bring a new company public, okay, total piece of junk, no possibility for future growth, just a total toy that would go to zero and be bankrupt within 6 to 12 months. They would buy it for their personal account. Then they would get on the phone and they would cold call people and get a bunch of suckers, okay, to buy the stock and get it to go up a lot while they sold to all of these suckers, booking profit for themselves, okay? That's a classic bucket shop. Now, fast forward to today, guys are on YouTube. Do you think that they're just like helping you? Do you think they're just being nice? Hey, let's go buy these stocks. Do you think it's just like altruistic? They're trying to create a subscriber growth? I mean, you're not that naive, right? I hope. God, I hope. You know that these guys already own all of these stocks, right? You know these guys have been buying these stocks for the last X amount of days or weeks, and then they come on YouTube and tell you to bid up their position. And you do it because it's fun. Hey, woohoo, make some money on this one or that one before it crashes. Okay, that's not investing. And what you're doing is making a lot of money for the guy who's creating the video, which good for him. I mean, at some point, the SEC will shut him down because it's pure manipulation. But between now and then, before the SEC figures out how to shut that down, guys can make money. And I'm not saying you can't do it. Go ahead and make some money. But just don't be the bag holder, okay? Don't pretend these companies are real. Go look at a balance sheet. Go look at an income statement, okay? What you own is a piece of junk. Now, you want to trade it. You want to be quick. You want to make some money. Hey, man, to each his own. Go ahead and do it. Gets halted. It gets opened higher. What I'm afraid that you won't realize is we're in a mechanical bull market with ridiculous amounts of liquidity and a clear manipulation going on that you're part of. And there's going to be a day in here where it gets halted and you're all excited because you own a stock that's been halted and it opens down 50% because there's just no bids anymore. So please be advised, all right? As a public service warning, take it for what it is. If you want to hate me for, sharing reality, go ahead. I feel I'm willing to take that cudgel because I'm trying to help you, all right? Just be aware of what you're doing. That's all I'm asking. Now let's move on. The single best way to play cryptocurrencies. Okay, I've been doing a lot of work on this. You guys know, I'm not going to go over this. We've already gone over this in other videos. I didn't invest in Bitcoin and Ether. All right, so hey, the stock, they went up huge. I could have made a lot of money. Right, went to 60,000 on Bitcoin. Everybody thought I should buy it at 60,000. It's going to go to 100,000, right? And then it drops 50% in 7 days or 14 days or whatever. Okay. So for me, that's not an asset that I want to hold on to. You can trade cryptocurrencies. You could try to find the next great one if you want. To me, it seems like there's like another great cryptocurrency comes out every, couple of months. For my investing portfolio, for long-term investing, let's remember this video and let's talk in 5 and 10 years. Let's talk in 5 years, okay? I think it's totally possible, totally feasible that I'm going to make more money owning the investments, the companies, making investments in my portfolio, owning the companies that touch every transaction and get paid. I think those stocks for an investment portfolio, not talking about trading wild volatility, but I'm talking about investing now. I think those stocks will have a better rate of return for me with less volatility than trying to pick whatever the next Bitcoin is or hoping Bitcoin goes from 30 to 100,000. Okay. I think if Bitcoin goes from 30 to 100,000, I'm going to make more money investing in the companies that get paid on every crypto transaction, regardless of the currency. I don't care if it's Bitcoin, Ether, ADA, Dogcoin. I don't care what the next coin is. I don't want to try to figure out what the next coin is going to be. I want an investment that makes money on every transaction. Let's go take a look at a couple of charts. We started this process, so I've been building positions into my portfolio. Okay. PayPal is a no-brainer. You say this is an old idea. What do you mean PayPal? Give me a break. No, PayPal is facilitating crypto transactions. We bought PayPal right here off of the double bottom. It kind of tested the 200-day, popped above the 50-day moving average. We own PayPal right here. The stock is walking up. Okay. The more they get involved in crypto transactions, the more they get paid on cryptocurrency, every transaction, the better this business is going to get. To a lesser extent, I think Square has to be on the list. We made a little money on this. We're out of this position right now, but it stays at the top of my list to watch. I may own it again. Okay. Now, here are the three stocks that really interest me. So those are two big names, right? You say to me, well, you haven't told me anything new. So I'm just telling you, for my investing portfolio, I think those stocks are going to do really well as crypto continues to explode and PayPal grabs a large portion of that crypto trading business. Okay. But here are the three stocks that really intrigue me. The number one stock in my portfolio now in regards to this cryptocurrency business is Coinbase. Now, first of all, from a technical perspective, company came public. Everyone got excited. I had no interest in owning it. The stock sold off, told everybody I'm not touching this thing, came all the way down, right? Then it set up a perfect bottoming wedge, huge up bar here. We own the stock. Okay. We own the stock right around this level right in here. Okay. Just started. It hadn't even started yet, really. It hadn't even broken out, really. But when I do research on this company, the more research I do, the more certain I feel that the institutional investor, I'm talking billions of dollars. I'm not talking about a guy who's throwing $5,000 or $10,000 at a cryptocurrency. I'm talking about the guys running billions of dollars. Okay. I don't care what the competition argument is. I don't care that there's other companies that are going to try to do what Coinbase is doing. It doesn't make a difference. In my experience, when you have a new space like this, there's always one name that's like the Kleenex of the business, right? It's just a tissue, but Kleenex was first and people call it Kleenex. You with me? They don't call it petroleum jelly, it's Vaseline. You see what I'm saying? There's always a name that dominates a new space. And institutional investors, when they begin to feel comfortable with that company's business model and it starts to knock down big numbers quarter after quarter, you just get this rush of institutional capital and it becomes the biggest name in the space. I think 5 or 10 years from now, we're going to look back and we're going to say, hey, Coinbase, you got Google, Amazon, Facebook, Coinbase, PayPal. Like, it'll be a name as big as that. It'll mean something. There'll be other exchanges. There'll be other guys involved. There'll be analysts that come out and write research reports about how competition is going to kill them. At the end of the day, institutions, in my opinion, are going to find this stock and they're just going to start putting money to work. And you're going to see this 45-degree angle on the stock. That's my opinion. I could be wrong. And guess what, Ray? I'll use stop losses, brother. Okay? We're in a mechanical bull market right now, and you love to tell us how you don't like stop losses. Okay. Next time the market drops 50%, we're going to have a real honest conversation, and we'll see what you feel like. But putting that argument aside for now, because I respect what you're doing, and I think it's great, and everybody has to follow their own way. Okay? So I don't want to get too much into the debate about stop losses right now. Okay. I protect my assets. I don't think it makes any sense to watch my portfolio drop 30, 40, 50% because it always comes back and I can buy leaps. That's your gig and good for you, right? But that's not how I run my money. But let's just share, you and I, fundamental ideas to figure out where we want to go with capital. That's what this is all about, right? And then we all have to use our own strategy to protect capital and capture upside. So what I'm saying is I think Coinbase has the potential to be a huge stock long-term. So it's the top of my whiteboard. I'm going to own it right now. I'm going to use my stops to protect myself in case I'm wrong, right? And I'll always look to find my way in. I call this a top shelf name, okay? I like SI. Silvergate. Now, the only downside to Silvergate at the moment, and I'm not sure, I'm kind of waffling back and forth with this, is that primarily their business is Bitcoin. So if Bitcoin prices were to implode for some reason, it's going to be hard for this company. So I like Coinbase more because they touch every cryptocurrency. It doesn't make a difference what it is, okay? But I do like Silvergate a lot. This is a merchant bank. So they work with institutions and help them use their Bitcoin in a business world. So it's a really interesting business model. It's over-reliance on Bitcoin makes me a little concerned. But anyway, it's on my list, okay? And I'll probably own it again. I'll probably own it as long as it stays in this uptrend, right? I'm doing work on SoFi. There's a chart pattern for you, okay? What I've done here is I've just made a colorful pattern for you. But basically, you have a huge pennant forming on SoFi, S-O-F-I, right? The first move up is stage 1. Second move down is stage 2. Third move up, stage 3. Fourth move down, stage 4. Fifth move up and out. 5 up and out. 1, 2, 3, 4, 5. All right. I don't know if this is going to be green or if this thing is going to break down next week. Okay. Full disclosure, I don't own it right now. I tried to put it up a position on yesterday. I didn't like how the stock closed, so I took the position off. It's at the top of my whiteboard, though. If it holds this uptrend in here, I have an interest in SoFi. And now I'm going to share one more idea with you, one more chart pattern with you. And I can't believe I'm going to do this because I've been on conference calls. I've been listening to conference calls. I've been trying to figure out this business. And I always come up with a reason why I don't want to own it because I think, no, this just doesn't make any sense for me. But I cannot avoid this chart pattern. I think I'm going to have to own it. Are you ready? Are you sitting down for this? My son would tell you right now, I should say to you right now, before I tell you that, I should hit the subscribe button. Subscribe, subscribe, subscribe. Thanks for that. He's 7, turning 8. No, truthfully though, I have a free ARMR email alert. If you're not on that free email list, I'm begged the question why. It's free, okay? On most mornings, I'm going to send you an email giving you a synopsis of what our approach is, and occasionally a couple positions we're focused on. Why wouldn't you subscribe to it? Just go to the website, okay? You can go right here to the website. Take a look, right up here. Click on that button right up here. Free subscription to the ARMR report. Boom. Done. There's our public service announcement. Let's get back to this chart. I'm going to share with you now a chart pattern that I just can't, I'm going to have to do it. Ready? Here it is. I can't believe Overstock looks this good. It's not a pure crypto story. If you guys, crypto. If you guys understand but I can't explain what they do right now. It'll take too long. Go listen to the last conference call where they updated their business. Okay. It's not a pure play on a crypto. It's a different type of business model. But this chart pattern is so good. I think I'm going to have to own that Monday morning. I wished I bought it yesterday. I didn't even see it until someone who follows me on Stock Twits, threw this question out there, and I looked at it. I said, "Holy smokes, that is a sick chart pattern." I don't know what's cooking there in Overstock, but I'm probably going to have to put that in my portfolio next week. All right. Now, those are my 4. Overstock is kind of like a, I don't know. There's 3 names that I love, and then Overstock is over here somewhere. I don't know. That pattern's so good. I'm going to have to trade it and keep doing research on it, try to understand more. But let's wrap up with a quick discussion on cannabis, and then I'm going to go through some chart patterns with you into your Q&A about things that we're looking at for next week. All right. So first of all, cannabis, real quick. There is a strange bifurcation going on between U.S. cannabis and Canadian cannabis. It's something we've all dreamed of here in the U.S. who understands the cannabis story. The U.S. cannabis stocks are just so much more valuable than the Canadian names. But because they trade on the Canadian Stock Exchange and they're still illegal and blah, 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 they have these ridiculous valuations. At some point, we've all, I don't know if you have, but I've expected at some point a divergence to start to show up where U.S. cannabis names get more respect. And what I want to show you is these 2 chart patterns, okay? MSOS is our favorite way to play it. So last week when they shook out down here, okay, we managed a little bit of risk, we reduced position size. We have a core position size on. And what I'm looking to do is double or triple that position size if we can close above the 50-day moving average and break the downtrend. So one thing to do, which I find helpful, is to use Fibonacci fan. Okay, and so the theory behind the Fibonacci fan, that's a pretty good one right there, is that when you break the 3rd downtrend, a trend change has occurred, right? So the first downtrend is the yellow line. You can see that was a tight downtrend. Then we broke that and we went right up to the middle trend line, which was the light blue line, and it sold off again, right? Then it rallied up to the green line, but then it sold off again. And now we've broken out of that 3rd Fibonacci fan sequence downtrend, telling us a trend change has happened. So if we can get above these highs in here on a closing basis, we are going to hit this asset hard. Now, we already have a core position on, but we'll increase that position size maybe 2 or 3 times because I believe that'll be the beginning of the next leg higher in U.S. cannabis. But look at what's happening with Canadian cannabis. That is a terrible chart pattern, breaking down from a base, making new lows, lower lows and lower highs. That looks nothing like what's going on in MSOS, which is making, at the very least, right now, it's making higher lows, right? Equal lows here. Now it's making higher lows. We're starting to get a relative outperformance. I don't know why. Maybe somebody always knows before we find out, right? So I don't know. If we start to see relative outperformance, are we getting closer? Is there something moving through Congress that maybe we haven't heard about yet, but all the congressmen and congressmen and women who are allowed to insider trade, somehow it's illegal for the rest of us to insider trade, but congressmen and women are allowed to take information that they learn about in the hallowed halls of Congress and trade their investment account. One day we'll talk about that and we'll go off on a rant. But my point is, are we going to start to see outperformance because something's happening that we'll find out about in a month or 2, right? And people who are in the know start buying it. We start to see that outperformance. I don't know. But you cannot ignore that outperformance. And take a look at this chart pattern. What is going on in innovative properties? The stock pays like a 3% dividend yield. They keep raising their dividend. This is a company who is a REIT that does triple leasebacks with cannabis companies. That's a sick looking chart pattern right there, guys. Looks like the thing's breaking out. Always have my eye on GrowGen. It tried to break out and failed, and the market got crushed. So we don't own it right now. We actually had a piece of it, booked a profit on it. When it came back down, we stepped out, but got my eye on GrowGen. Okay. So anyway, be aware of what's going on in MSOS. And of course, we could just look real quick. My top 4 favorite names, look, Green Thumb looks delicious. That thing's breaking out. Hey, look at True Leaf. Holy smokes. Making a bottom right on the 200-day moving average. It looks great. Pure Leaf. Nothing wrong with that chart. Cresco, I don't know. I don't like Cresco as much. Somehow I can't get Cresco. But all of these U.S. cannabis names are really starting to set up. Let's look at TerrAscend real quick. Not quite. How about Columbia? Oh, that broke down. It looks terrible. I like the big names. I'm really going to stick with the big names. Verano looks awful. Okay. So right now I'm sticking with the big names. Juicy looks pretty good, actually. I like the Juicy story. Okay. Now, I want to wrap up. Something's wrong with the video all of a sudden. I hate when that happens. Anyway, you don't have to look at me. Let's look at charts. I'm going to wrap up with a couple of charts. We absolutely slayed it last week in Amazon. Okay. So the place that I'm going with money right now, until I see small caps make a new high that confirms the breakout in the whole market, is I'm going to keep focusing on really big cap tech charts that look like this. So I'm going to just rifle through some charts for you guys to look at. And what you want to do is take these charts, and then when you go through your own process looking for new ideas, see if you can find charts that match this type of setup, because this is where the money is right now. Okay. Amazon we own. Adobe. Just all I want you to do is look at the charts. If you didn't know what the symbol was, you would say, gee, this is like the exact same pattern. NVIDIA. DocuSign is behind NVIDIA, but it's almost the same type of chart pattern. Okay. We own Microsoft. Notice how it broke out of that pennant, right? And now it's just walking up the line. Okay. There's so many more that we could go over. I mean, I want to get to your questions now. So let me just see if there's anything else I want to just touch on. Oops. Nope, that's not the pattern I want. Oh yeah, you know what? I think CRM looks like it's doing that. Okay, same type of pattern on CRM. Right. What I could do if you want is draw this trend line like this and say, there's your pennant. See, these are pennant breakouts. These big cap stocks had big consolidations as everybody was flying into a bunch of meme stocks that have no earnings or revenue. And now what's happening is real money's coming back to work, and it's being put to work in these types of names. Big cap tech stocks are driving the market higher. And don't forget Apple. Okay. Right in here was the breakout of the cup and handle. And then the entry point that we took was right here after a double bottom at the 200-day. Okay. So here are a couple of names that are at the top of my list, maybe to buy next week. We just added shares of Tesla actually on Friday. This is a simple reward to risk setup for me. Okay. There's a ton of call. The biggest open interest on the calls is 1,000. Okay. What we're doing is we're buying it right on the 200-day moving average, right on the uptrend. Now, if it breaks below the low of yesterday, I'm out. Okay. It's over for me. Very small, very tight stop. But if the thing takes off from here, my reward to risk is phenomenal. Okay. I'm wondering about Ford again, but that's not the chart pattern I'm looking for. But I am wondering about that chart, because what you have on Ford, right, is this huge. In fact, let's take a look at the weekly. See, that's what you're looking at on Ford. So you got to remember where you are in the whole process of Ford. It's just broken out of a huge base. And this is just a pullback to the 50-day moving average. And so sometimes in an uptrend like this, the buying the pullbacks to the 50 are brilliant. So I need a better pattern than that. I'm not going to buy that first thing next week, but just wanted to show you that pattern, something to think about. Here's a chart I could buy first thing Monday morning. Disney. And let me tell you another reason why Disney could be an easy ad for me. Okay, first of all, there's your double bottom, there's your chart pattern. So these are all the same types of patterns, although, you know, some are a little bit bigger, some are a little bit smaller, but there's the pennant formation. You break out of the pennant, right? So Monday morning, I'll be looking at Disney for sure. Okay, take a look at Qualcomm. Oh, but before I get off Disney, look, if the Dow is going to break out, remember we said that the Dow is, we just added that to the index only portfolio. Right, here comes the Dow breaking out of this little bit of a base here. Right, well, it's not going to do it without Disney and other Dow names as well. We already own Apple. We already own Microsoft. I mean, these are Dow names. The Dow's breaking out. Disney's probably going to go. Okay, take a look at Qualcomm. These are some of the chart patterns I look at and I say, if I don't own this down here at the 200-day, I just, you know, when the stock is trading up here at, you know, $180 a share, I'm going to say, how can I not own that and collect a 3% yield while I own it? That's just a no-brainer. I love Qualcomm and AVGO. These things pay 2 to 3% yields, right? And they're coming out of pennants. This is a lower risk way to put capital to work. If the market keeps squeezing higher, you're able to make some money in these big cap tech names. You're collecting a yield at the same time. Not a big yield, but today's market, 3% is big. 3% is real big. In full disclosure, I own Broadcom somewhere around here. I picked this up after the market imploded in my index, in my dividend portfolio, and I haven't sold it since. And I'm just killing it, collecting a dividend yield, and the stock's going up. So those are a couple of names for you to keep your eye on. And here's one last one. Autodesk, just the exact same type of chart pattern that's been making us a lot of money. All right. There's many other names I could share with you. I got a lot of stocks I've been looking out to buy next week. Become an ARMR insider and you'll know them all. Okay. Let's get to your Q&A. Before I get to Q&A, last one, Nokia, right? Added Nokia actually on Friday. Breaking of a major downtrend, cup and handle setup. Okay, forget about this ridiculous spike. Let's just call it what it is. There's the support, and it's making a nice little pattern right on top of that. So, Nokia. All right, let's get to Q&A, guys. I've gone a little bit over here. What do we got? Business. Good morning. Good morning to you, my friend. SDGR. Oh yeah, Schrodinger. It's an old favorite of mine, and I don't own it. And I didn't own it. I should have bought it right in here. That was an easy call. This is a massive gap down. I'm not going to mess with this chart right now. I have to go do some research, figure out what that gap down was, and see if I want to try to get over it. But you've trapped a bunch of people up here, so that's a lot of overhead. That's not the pattern I'm looking for. I'm going to try to rifle through patterns so we can get to as many as possible. That's a pattern that might be worth looking at. That looks like a nice little cup and handle. I'll write that one down. It's PI. I don't know that stock, so I'm going to have to do some research on it. A at O. I don't know what A at O is, brother. Oh, ATOM. That pattern doesn't work for me at all. So I'm just going to skip. I'm just going to stop on patterns that work for me, okay? So we can get to all the Q&A. All right. Brett, can you cover your position size rules? What is your initial buy and what is your max size? Thanks. That's a good question. That's a good question. I wish you could see me. The blur is not too much of an annoyance for you guys. Everybody's different, and it depends on the type of portfolio I'm managing. If I was managing a portfolio of, let's say, $50,000, I might just have 10 stocks in the portfolio, and I'll put 10% in each. Okay. If I'm managing a portfolio of many millions of dollars. My average position size is still going to be probably 5%. So maybe if I'm running a lot of money, I might have 20 stocks in the portfolio. If I'm running a small amount of money, I might have just 10 stocks. Even a smaller portfolio, I might just have 5 stocks. Okay. But that's just how I do it. I mean, you got to do what's comfortable for you. But a basic rule of thumb for me is to look at the volatility of the asset and then have a bigger position size. So my Amazon position is going to be, let's say, 5% of the portfolio, maybe 10, depending on the portfolio. Okay. But if I'm going to buy something like, I don't know, let's say SoFi. If I'm going to buy SoFi, it might be 2.5% of the portfolio. But Amazon will be 5, like twice as big, because the volatility in SoFi is so much greater than the volatility in Amazon, right? So, and then if I'm buying an ETF, the average position size is going to be 10%, could go up to 20%. Because it's an exchange traded fund. I don't have any individual stock risk. It's not like there's going to be a bad story overnight. Stock drops 15%. It's an index. You see what I'm saying? So that's kind of how I look at it. I hope that helps. You have to figure out what's most comfortable for you. Good morning, Deb. How are you? Long-term thoughts on HITIF. HITIF. I'm not getting a symbol on that. Help me out there. Not sure what that is, Deb. HITIF. It's not working for me, so maybe come back around and ask me again. Just curious, since you've been trading so long, you kept records to track your progress in skill. Absolutely, Green Ghost. And I don't just look at, P&L on a yearly basis. I mean, I do it on a month-to-month basis, on a quarterly basis. I mean, you can't overanalyze. You can't look at it on a week-to-week basis. I mean, you have to give yourself some time. Probably quarterly is the best, and I'll make an adjustment if something's not working over a 3-month period. I'll say, what am I doing wrong here? I might give some time for 3 months to execute and then say, wait, this isn't right. Because we all go through periods where we're killing it. And then all of a sudden the market's zigging and we're zagging and we're saying, why is that? Because the ARMR investing way, it's about using algorithms to tell me when to add risk, take risk off. If I'm just running a portfolio of indexes only, which I do, then I can just follow the algorithms and index only and create alpha by owning indexes and taking risk on and off based on the algos. But and I do that with one portfolio, but what I do with the majority of my assets is I do research on companies. I get a risk on signal and I determine what stocks I want to own. And there's going to be times where I own the wrong names. The whole market goes up and I just bought the wrong names, right? I mean, it happens. So you have to try to figure out what kind of market you're in and make sure you're zigging and zagging correctly. So earlier in the year, I was too overloaded, as an example, in the innovator names when the industrials were skyrocketing. This time around, 6 weeks ago, when we really focused on big cap tech, as I explained to you all, I think the next leg up is going to be NASDAQ 100 leading the charge and a resurgence in the innovator names. So that's where we went. We got it right. We created a lot of alpha. So you always have to pay attention to your P&L and adjust your thinking. So yeah, good question. Notice about the S&P, every time it dips Thursday, it bounces back. It doesn't. Can you please check? AEI. All right, AEI, that's not going to work for me, my friend. That's just a chart that looks busted to me. So that's not a name I'm going to get involved in. And Razzmatazz, you know what? This is what really concerns me. We're in a mechanical bull market right now. And so that's what the market's doing. It drops down, immediately finds support, rips higher. At some point, that's going to change. We all know it. So we keep riding this bull as long as we can, but we don't drink the Kool-Aid. We don't think that it's always going to go up, and the Fed will always support us. We know there'll be periods where it goes the other way, and we've got to protect the hard-earned capital we've created. Okay. AMD. I love AMD, Ray, and I think what I'm doing. Oops. Hey, what we like to do on our trading desk is we like to own Xilinx, okay, which is what we own. Xilinx is being taken over by AMD, and we think there's a little extra kicker there. As it gets closer to takeover, you'll see this thing trade right up to its takeover value. So we own Xilinx, but that's a perfect double bottom down there, and AMD looks great, and I think it's got a lot of catching up to do. I think once this deal closes, this stock, both of the, it'll become AMD again by itself, and I think it'll start to fly, is my guess. Trade desk, not bad. Not a bad looking pattern there. Whoops. You know what? I'm going to put that on the list to take a peek at and remind myself of next week. TTD. Look at that. It looks like a shakeout and a breakout. That looks really good. Humble. There are some of these new issues come public, immediately sell off, and then they set up a pattern that's really attractive. That's not one that is really attractive to me. I mean, I wish you the best of luck on that one. But like Coinbase is this bottoming wedge that I like a lot. Okay. So that's why I bought Coinbase. And if you want another chart that looks exactly like this, I really like Coupang. Same exact situation. Same chart pattern. Pretty crazy Korean story. I love this story. So there's a thought for you. Yeah, right. There's a whole bunch of stocks like that. And hey, if you're making money on them, well done. All I'm asking you to do is understand what it is you're playing with. Let's see. SNTG. Let's take a look real quick at there's no information on it right now. Yeah. I wonder who brought them public. That's the question, because it's headquartered in China. Oh, this piece of junk. I mean, come on. I don't care. You know who got shares of this stock? The people in China who run the company. Okay. And they come to the U.S. and they get a bunch of U.S. investors to mark it up for no apparent reason so they could dump it and make a lot of money. I just have no interest in that. And I had this conversation with you all. He's saying who got into the pre-IPO price? It's a whole bunch of Chinese people probably who are part of the Chinese government. That's my guess. That's rank speculation, but I'm just telling you how it is. And I tried to explain this. Last week or 2 weeks ago, there was, hey, let's buy Alibaba. No, I got no interest in that. Okay. And let's buy some Baidu. It's breaking out. No, I have no interest in that. Okay. And so just so you all know, in case you're new to this, the ARMR Investing Way and this YouTube channel, I don't buy Chinese companies. I don't buy companies that look at you in the face and lie to you, right? They tell you. Maybe it's even better, right? Because there's so many companies in the US, I'm sure a bunch of them are lying to me and I don't know. I have to do my research. But the Chinese companies say, hey, we're not even going to follow generally accepted accounting principles. Okay. You don't even own any of the stock, any of the earnings, nothing. I mean, do you understand what you own? These stocks are, I mean, why? I don't know why anybody would invest in the Chinese companies. And then you see what they did with DIDI last week. So it comes public here in the US and they get a bunch of US investors to sucker in and buy it. And then they come out and decide, look, a bunch of US investors bought it up here. And then the government of China decides to crack down on their business a couple days after the IPO. Come on. I could find a lot more inventive ways to have my money stolen. Moving on. Apps. This is a real disappointment, real disappointment. We sold this stock. Actually, we booked a profit in it, and we had a small gain in it. We bought it here. It popped up. I thought we were going to get some legs. Then the thing had this big down day because the company had to delay, I think it was a 10Q filing, and they did it right at the end of trading on a Friday, right in front of a 3-day weekend. I mean, that's just so suspect. I don't know what's wrong with the accounting or why they had to delay it, but I don't care. I have to stay away from the stock now until they figure that out, I guess. I don't know. Maybe it has something to do with their recent acquisition. Whatever it is, I don't like companies that make announcements before a 3-day weekend about a delay of their accounting information. Oh, oops. What the heck am I doing here? Here we go. HITI. Oh yeah, high tide. I looked into this thing and I didn't like, Deb, I looked into high tide and I didn't like what I found, and I can't remember why right now. But I didn't like it. I didn't like what I found at all. And so I'm not going to buy the stock. But I did all the work that I normally do on a company. Looking at balance sheets, income statements, listening to conference calls, doing everything I usually do. Please forgive me. I can't remember what it was about it, but there's something about it that really rubbed me the wrong way, and I'm not going to touch the stock. So I hope you make money on it. I mean, just for me, I have a certain threshold of what has to occur in a company for it to make it to my whiteboard, and they're not hitting that threshold. You bought leaps on coin at the bottom. Good for you, Ray. Hey, Levi's. Yeah. Levi's just absolutely blew out the number. The stock, we own the stock right in here when it came back above. It had the shakeout below and it came back above the 50-day moving average. We put it in the portfolio. We're making a little bit of money on it. But you look at that earnings announcement, and then they blew out the number. The top line, the bottom line. They increased guidance going forward. This stock should be a lot higher. They're really killing it, Levi's. So it helps that my son's name is Levi, and this is his favorite stock. So it's in the portfolio. But, I mean, honestly, they had a quarter as good as Nike, and look at what Nike stock is doing. So, I mean, I think Levi stock is going higher. You're just incredible, Ray. You sell things right at the top and you buy things right at the bottom. You're just the greatest. Well done. STEM. Brian, let's do a little work on that. That chart does not intrigue me at all. So we could talk about that in the Slack room on Monday. Just remind me. Don't know it. I'll do some work on it. We could talk about it on Monday. I know Brian's an insider with us, so we can go over that. And, I'm just avoiding solar. I mean, first of all, I think after discussing it with other ARMR insiders, I probably don't want to do TAN. I don't want to own Chinese companies, and Chinese companies are inside of TAN. So probably not going to do that. I don't know. Enphase is obviously the number one name here in the U.S. and I also like Run, but I don't like these stocks. I just can't get behind them. I'm not going to own them. Or do I think they're going to break down? I don't know, but if I had to guess, I think they're going to break down, Brian, but I don't know. Hey, thanks so much, Jason Lewis. I appreciate it, man. Well, that chart seems to be bottoming out down here. Sean, let's take a peek at it and do some research. I mean, there's nothing about that chart that makes me want to buy it, but maybe it's making a bottom. Herb Tech, no opinion there. Are you still liking CGC after? No, I really don't. I don't. I think I'm going to focus. Whoops, what did I just do? CGC. I don't like it, Deb. I don't like it at all. That's a breakdown. I should get rid of this green because now it's turned red. That's a breakdown of a pattern that looks god awful with all the moving averages rolling over. Something's really wrong with the Canadian space. So I'm just going to stick right here. You know, you heard it here first, okay? I don't know. This is just rank speculation. But the way the stocks are acting, I start to try to figure out what's going on. And I think I was chatting with a couple ARMR insiders about this maybe a week or two ago, maybe last week, a week or two. I wonder if the legislation that comes out that makes, you know, U.S. cannabis more federally legal in some fashion totally locks out the Canadians or any other country for that matter. It might, maybe it's going to insulate the U.S. market for X amount of years and only, you know, this, that, and the other thing. And so I think a lot of people who own CGC and Telray and Kronos are hoping and expecting when the U.S. market becomes legal, those big Canadian companies will swoop in and take over and blah, blah, blah. And I don't know. Maybe the legislation comes out, doesn't let them do that. I'm just rank speculation right now, just by looking at chart patterns. I could change my opinion if the chart pattern were to change, but there's something that looks really wrong with these patterns, you know, really wrong. All right, guys, look, that was lots of fun. Thank you, Tech Mug. I appreciate that. I had lots of fun chatting with you guys. As always, if you have not already subscribed to the free email alerts, please join us. Okay, go on and subscribe. Go to the website, subscribe to the free email alert. I appreciate all of you and all the things you bring to the table that make me think. It makes me a better trader. I appreciate it. You guys have a great weekend. Take care.